In this video, I'm going to show you exactly how to make $1,000 per month in Tesla utilizing the poor man's covered call option strategy. But that's not all. We'll break down Cathie Wood's bold prediction for Tesla and why Tesla is poised for growth going forward. And we'll walk you through a live trade, exactly how you do it step by step on the option trading platform. Whether you're a Tesla fan, an option trader, or just looking for ways to grow your portfolio, stick around to the end and you'll gain the confidence and tools necessary to place a poor man's covered call in Tesla and gain that $1,000 a month in monthly income. I'll also share with you my strategy for maximizing profits and avoiding common mistakes that many traders make. So grab a notepad and let's dive in. Be sure and hit the like and subscribe buttons down below. Also, download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. And disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research. And if you're new or learning options, start small and you're the one taking the risk. So you've got to do the ultimate risk. Cathie Wood's CEO of ARK Investment has reaffirmed her position that Tesla will reach $2,600. That's more than tenfold from where it is today in the next 5 years. So, do you agree with Cathie's bold prediction, or do you think that she's full of baloney? Well, for the most part, I definitely agree with her prediction. However, I don't know the exact price. Is it $2,600? I don't know. And it doesn't have to be. With this strategy, even if it's half that or much less, I'm confident that it is going to go up and we can kill it with this strategy. Let me know in the comments below, again, what you think about the prediction from Cathie. Tesla's aggressive push into autonomous driving technology and its planned robotaxi network are seen as transformative opportunities. The company aims to launch its robotaxi service in Austin in June, with plans to expand to other cities and eventually operate millions of autonomous vehicles. Industry analysts estimate the global autonomous driving market could exceed $5 trillion, and Tesla's early lead in full self-driving technology positions it to capture a significant share. Tesla's energy business, which includes batteries and solar products, is growing rapidly, up 67% year over year in 2024, and now comprising 10% of total revenue. As demand for renewable energy solutions rise globally, this segment offers Tesla a stable recurring revenue stream that diversifies its business beyond vehicles. The company is also expanding its supercharger network, supporting both its own vehicles and increasingly those of other competitors. Elon Musk's renewed focus on Tesla after stepping back from political engagements has reassured investors and boosted confidence in the company's ability to execute on its ambitious goals. Tesla's culture of innovation, from AI and robotics to new vehicle models, continues to set it apart from its competitors. New U.S. Department of Transportation frameworks are making it easier for Tesla to test and deploy autonomous vehicles, potentially expediting the approval of its robotaxi and FSD features. This regulatory support could further accelerate Tesla's growth trajectory. Robotaxi and energy solutions are game changers. So let's jump into how to place a poor man's covered call, and then we'll jump into the live trade on the option trading platform. The poor man's covered call is a capital efficient option strategy that allows you to generate monthly income from Tesla without owning the 100 shares outright. Here's how you target $1,000 per month. You buy a long-term in-the-money call option called a LEAP, long-term equity anticipation security. And what you do is you purchase a deep-in-the-money call option on Tesla with an expiration date near about a year out. And this LEAP acts as a substitute for owning the stock, offering similar upside exposure at a fraction of the cost. At the same time, you sell a short-term out-of-the-money call. Each month, you sell that short-term out-of-the-money call option against your LEAP. It doesn't cost you any extra buying power, or it actually reduces your buying power. The premium collected from selling these calls is your primary source of monthly income. All right, guys, here we are on the Tasty Trade option trading platform. There's a link down below. Check it out. It's very intuitive for trading options, and it's the one that I use all the time. It's my favorite. There's some benefits if you go through my link. All right, so real quick, look here on the financial page. You can see the income statement and balance sheet snapshot. Revenue is in the blue and net income in the yellow. You can see increasing year over year. And the balance sheet super strong as well with assets and liabilities. So Tesla, solid company for all the reasons we just reviewed. Now, if you look at the chart right here, in the 1 year, I've got the Bollinger Bands in white. So you see we've moved up a little bit on the Bollinger Band. So we've had a little bit of an up move. We're actually up close to 5% today, 4.8%. But you see the moving averages. I like to use the green for the 50-day moving average, and then the 200-day is the red. And I think we're gonna have the cross of the 50 over the 200 here soon. We're at 290. Actually, we just had it. Technically, the moving average hasn't moved, but the stock price moved above it. It's 298. The moving average is around 292 for the 200 days. So we just moved above it, which is a key technical indicator and a reason that can drive the stock price up as well. So I like the technicals. I like the fundamentals. Let's go to the trade page right here, trade tab, and then you can see the monthly option chains. And I'm going to go out close to a year. Let's go to the March. It's 315 days to expiration. We'll open that up, and then we're going to buy. I'm going to go near the money. I like to go around at least the 65 delta. It's a $500 difference between the 64 and 65. So hey, I'm going to save $500. I'm going to go 290. It's a little bit more aggressive, but we're it's still in the money. Now we're going to click on the right on the ask the buy, and then we can go to the mid price. So you can see these are pretty liquid. There's not a big difference. Looks like 40 cents between the bid and the ask spread, but it's liquid. 91 million shares traded. So that's why I like trading Tesla as well. But it's going to cost $74.65 for this option. That's 315 days out. And this controls 100 shares of stock. So that's $74.65 times 100. So that's $7,465.85 right now. The market's open, so it's moving, that we would pay for buying this option. Now, to buy outright the 100 shares, it would cost $297 times 100 shares. So that's $29,767. So 29,000 versus 7,000. Yeah, that's less than a third the price. So that's what is so capital efficient about using these leaps options, and why this is definitely my favorite strategy. So we'll close this up, and let's go to the curve mode, and you can see how this gains. As long as the share price moves up, we make money. You can see here, straight line up, just like owning those 100 shares of stock once it gets to 365. So if we get up to that 500 range, Cathie Wood's talking 2,600, but we make like 10 grand right here on the leaps option alone if we get up to this 475 range. So to me, that's incredible. Let's go back to the table mode now. We're going to close this up, and at the same time that we're purchasing this option, we're going to sell a short-term call against it. So we're going to open up the June, which is 42 days to expiration. And I mentioned we're going to collect $1,000 a month. So we can collect $1,000 right here, $1,090 at the 30 strike, the 30 delta, not 30 strike, 30 delta option. We can sell that. It's the 340 strike, and you can see that brings our cost down by $1,000. And we do this every month after month, and we collect $1,000 on selling that 30 delta call short term against it. So keep in mind, this cost $6,400 for the entire poor man's covered call trade. So if we're collecting $1,000 a month on the short call, then we'll pay that off in 6 months. just doing that. And then we can hold the Leaps option and control 100 shares for free. And at the same time, we've got all this room to move from the 297 all the way up to the 340. So that's $40 in appreciation that we can make in the Leaps over time. So we hit review and send and place the trade. All right, so now here's a little bit of a tip. What do I do? How do I manage risk and maximize profits? Well, ideally, the short call expires worthless and you keep the full premium monthly. That's $1,000. If Tesla rises sharply and threatens your short call, you may need to roll it up and out to a higher strike price or a later expiration date to avoid the assignment and continue generating that income. So once I get down to around 15 to 20 days, if I'm tested, then I'll roll to the next month. If I'm outside that 15 to 20 day period, then I'll just roll out in the same month. The cost to do that is much less than the amount of dollars that I'll gain on the increase in the price of the stock on the deep in the money Leaps option. Now, when you buy the deep in the money call 6 to 9 months out, you can close that position and buy a new Leaps option at about a year out. So when your Leaps gets to 6 to 9 months, because you first put it on at around a year, but time decay, as it gets closer to expiration, so at 6 months, then time decay moves much faster. So what you're going to want to do is close that Leaps option and roll it out, or what you do is buy another one out a year. So you're going to close your 6 months or your 9 months and then buy one in the 1 year time frame. Now, you repeat this process each month, aiming for a total premium collection of about $1,000 a month. All right, guys, be sure and download the free options workshop in the link below. Remember to hit like and subscribe. Leave a comment, ask a question. I answer everyone. Let me know, are you utilizing this strategy or a different one? And what do you think about Tesla and Cathie Wood's prediction? Thanks for watching. I'll see you in the next video.